Hi all, welcome to TCM Education. My name is Michael and I'm the analyst and mentor here on the channel. I want to welcome you to this presentation of how to start day trading in 2025. Being that I started trading in 2008, just before the market crashed, hope you have better luck than I had. Anyway, when I started trading in a US trading room alongside some great teachers, and hope you all have the same experience with me 18 years later. So who is this basically this presentation or video for? It's for those who want to start trading the US equity markets. That's what is our topic. We're not going to talk about Forex, crypto, futures, commodities, nothing like that. Our focus is only day trading. Again, day trading the US equity markets, and this particular presentation is going to be geared towards US day traders. So why is it important to mention US day traders from the beginning? Because there are rules that apply directly to US day traders, and one small part, but still an important part of this presentation will be regarding those specific rules. So let's start with the definition. What is day trading? Basically, day trading, and let's take a look at one stock that I'm sure everybody knows. Let's take a look at Tesla. In a minute I will explain what you're seeing in front of you. But first, let's start with the basics. What is day trading? The day trading is making buy and sell decisions inside the trading day, which spans between 9:30 in the morning Eastern time and 4 p.m. Eastern time. So that's 6.5 hours that during those times you can sell and buy without limitations. So why did I say just a couple of minutes ago that it's important that you are a US citizen? Because as a US citizen, there are already some limitations. We'll discuss them in a bit. But basically the idea here is that you can buy on paper 50 positions and sell 50 positions. When a position means one sell of Tesla, you buy one sell of Tesla and sell one sell of Tesla, or you buy 500 or 5,000 shares of Tesla and sell it in increments of let's say 300 times. So unlimited ways to trade intraday: long buy and sell, or sell, which is a short. And we'll discuss what is a short later, but you can basically buy, of course, and then sell, or sell and afterwards buy. That's one of the great benefits of trading the US equity markets. So basically, day trading is you act in the market on various stocks, unlimited number of executions between 9:30 and 4 p.m. And now some of you obviously that know something, what about the pre-market and the aftermarket? I'm going to totally disregard the trading in the pre-market and in the aftermarket. So when you're trading only 6.5 hours, we just started, you don't need to trade the pre-market, and you definitely don't need to trade the aftermarket. So 9:30, the bell rings, you start trading, and 4 p.m. you have nothing left. That's the definition. You sold all your position and you're starting the day after with 0 positions. That's the definition of a day trader. You only act during the trading day and don't carry positions or position, not even one, overnight. Hope it's clear. Now, what is the difference between day trading and investing? It's nothing, none have to do with the other. Day trading is acting within the trading day, while investing is buying a position in Tesla. Let me show you the daily chart of Tesla. Let's look over the last 5 years, and over the last 5 years, and again the chart may be misleading because Tesla has split its shares a couple of times, but you know what? That's already a mistake. Let's look at the last year. So over the last year, you can see the price of Tesla fluctuated between the lows, let's say 182. Here it is. You see the number. To the highs 488, and now it's 316. And basically you can carry the position wherever you bought it. I mean, if you have enough funds in your account, you don't need the margin, yeah, you can carry the position if it is 1 share or 5,000 shares. Again, you have no when you buy and you don't use leverage or any other borrowed money from your broker, you have your money. There are no regulations applying to you, so you can carry your position for as long as you want, maybe until it gets to $50,000 per share, or goes maybe, God forbid, to zero. Hopefully it won't. Okay, so that's the difference. Day trading has a close span of time, one trading day between 4:30 and between 9:30 and 4 p.m. And investing, I mean, there are so many ways to invest, but basically you carry a position over a period of months, sometimes years. If you're Warren Buffett, you can carry a position for, I don't know, maybe 40 years. He owns Coca-Cola for 40 years, and maybe has other positions that are even longer with him and the Berkshire Hathaway. So that's the difference between day trading and investing. Nothing in common. There's nothing in common other than we act buying the same stocks, but we are holding those stocks for a very short time, trying to extract profits inside the trading day, while investing is amassing fortunes or profits over a long period of times, and that requires a totally different strategy than day trading. Now let me ask you a question. Is this right for you? Okay, and now I'm coming to the US regulation. If you are a US citizen and you want to participate in this game using a US broker, you need to have at least $25,000 in your account. If you don't have $25,000, you cannot be a day trader, because there are rules in the US. So day trading isn't allowed to those who don't have at least $25,000 balance or above in their account. So that's already an issue for a US beginner. Assuming you do have the money, no problem. You open an account with a US broker. They all have the same regulations. Most of them, if not all of them, have FDIC insurance, not against losses, but against your money evaporating from the account. So when I started trading, I remember I had $30,000. That was my initial investment in trading the US equity markets. And of course I was scared to that, because if you lose 5 and you end up with $24,999, they close your account. You cannot be a day trader anymore. So is it right for you? You at least need the money as a US citizen which trades with a US platform. Okay, now let's talk about how many hours you need to work per day. You will probably go to various websites or YouTube videos where you see a day trader sitting on Copacabana Beach at 9:30 in the morning when the market's open. He's drinking and sipping pina coladas, and that's not the case. Day trading is a job. You need to apply yourself between 5 and 6 hours per day. It's not a lot of time. If you don't apply yourself, the results are going to be that you won't be able to day trade, and you will, you can go to the beach, maybe even to Copacabana or wherever, but it's not going to be using profits from day trading. Okay, so again, what is it right for you? The money and the commitment to work between 5 and 6 hours per day. If you think that you're gonna go by working half an hour or 2 hours or 3 hours or 4 hours, 99.9% I would have to say it's not gonna work. That's a job, it's a business. There are no businesses that work half an hour per day. Or maybe there are, I'm not aware of even one. Most of the businesses that are successful work 10 to 12 hours per day. Sometimes a restaurant will work between 8 in the morning and 12 at night. It's not a restaurant, it's a day trading business. 6 hours per day. Sometimes a little bit more if there's action in the pre-market, but you can take a break, obviously. So it's not hard work in terms of doing manual labor or stuff like that. So you need the money, 25 plus, let's say 30, and the commitment to work between 9:30 a.m. in the morning to 4 p.m. in the afternoon. That's Eastern time in New York. If you live in California, it's different. If you live in the mountain time, obviously it's different. If you live outside of the US, Alaska, Hawaii, I don't know what are the time frames out there. Now let's get to the real business. How much time you want to devote yourself to learn the business of day trading. And again, that varies, but I have to say that anything less than 6 months of learning, of a steep learning curve, is not going to happen. So you need to apply yourself and learn daily for at least 6 months, if not a year, to understand the complexity, how the markets work, what are you going to be looking at when you want to buy. You're going to be investing your own money and working 6 hours per day, and you want results. And it's not going to be a flash. Most likely you're not going to get a flash in your brain and you'll know this business immediately. So let's look. Let me give you an example. So you're seeing this chart here, and that's a daily chart. Of course, that's it. We're not looking at daily charts anymore. Let's look at the intraday chart, and let me pick anything at random here. Walmart. Not our favorite cup of tea, but just to make a point. So this is Walmart. Each bar represents that you're looking here represents 3 minutes, and the starting you can see at the bottom of the chart, you can see 16, that's 4 p.m. on the previous day, and immediately the market opens, in this case without any gaps. We'll discuss what a gap is. And this is the chart of Walmart. So what do we see Friday, July the 25th, 2025 in Walmart? So what's happening here? So the stock starts trading anywhere between 90, let's call it 97 and 96.60, then breaks, as you can see here, the high here. Let me draw it for you. So breaks this level of hold on a second, horizontal line. Okay, this breaks this horizontal line of 96.90 and trades higher for about an hour until it reaches 97.60. So that's how much is it, like 70 cents, and then sits here, moves sideways for 2 hours, and moves lower, and then moves sideways again for another hour. So that's how the trading day in Walmart looked on Friday, and the previous day it looked totally different. And on Monday, tomorrow, when the markets are going to open, most likely 99.99% the price action in Walmart will be totally different than the price action it had on Friday. So trading days don't repeat themselves. they are sometimes similar, but they don't repeat themselves there are no trading day twins. If it happens, it's maybe once a millennia. Never seen anything like that. Okay, so that's basically your job to make money trading Walmart. Why Walmart on Friday? Because I just decided for you that you need to make money on Walmart. So can you make money on Walmart? Yes, you can. If you buy it at 96.90 and sell it at 97.70, that's 80 cents of profits. So if you buy 1,000 shares of Walmart at 96.90 and sell it with an 80-cent profit, that's $800 of profit. So 1,000 shares times 80 cents per share, that's $800. So how simple is day trading? Is this repeatable? And the answer is it's not repeatable and it's not very easy. And I will explain in a minute why. But I hope you got the concept. It was a random pick. Let's go for another pick. Let's go with a stock that actually was weak, meaning ended up in the red, like Amazon. So what was the trading day? Oh my God, horrible. What was the trading day in Amazon basically on Friday? And if we look at the price section, there was a spike in the morning of like $4, which is nearly, let's say nearly 2%. Very weird. You can see the volume bars at the bottom. We'll discuss them later. And then the stock does nothing, moves sideways. You can see it moves like in a box all day. I never seen anything like that in Amazon. So that's a first for me also. The first for you, the first for me. Can you make money trading Amazon, buying and selling Amazon on Friday? And the answer is yes, you can. On paper, if you buy at the lows 231.20, here it is 231.20, and you sell at the highs at 232.40, that's 120 cents, $1.20. So you buy at the lows $1,000 shares, and you sell at the highs. So and that's here you are, you made already $800 in Walmart, and here is another $1,200 in Amazon. We already made $2,000 without even basically effortless, without using our brain. It just the market is giving us all these amazing opportunities. Now obviously I am joking, it's not going to happen. That's obviously in retrospect what you're seeing here. Actually the price action in Amazon is plain hideous, and we're not going to discuss why I insulted Amazon at this time. So let's wrap up the first part of this presentation. We discussed what is day trading. Hope it was clear. We discussed the concept of day trading versus investing. None have to do with the other. Is this right for you? 25 grand or more and 5 to 6 hours of work every day with a 6 month to a year of a learning curve and commitment to do and to come to work every day. And now let's talk about the noise that involves day trading, which we call beginner's traps, which is fear of missing out, revenge trading or over trading, or if some of you know about poker, getting into a tilt where you are losing control and you lost money and you want to recover it, and you basically need a drink and start pressing the buttons. And again, if you begin your trading career with the right sets of values and education, or the right one, then you won't be falling for this, killing the account, going for revenge trades, over trading. When I was in the US trading room with my first mentor, which was Chris Mercer, rest in peace, It just died amazingly and very sadly, just I think a month ago. So he set up the trading room in a way where you know exactly what you are doing. He was a professional. He was a great teacher, and so I myself didn't have to deal with this noise, FOMO and greed and revenge trading and over trading and doing stupid stuff and losing my account, and then you need to get more money, and sometimes you can, sometimes you cannot, and if you cannot, all is in vain and you're not going to be coming back to this business. Okay guys, I hope it was clear. This was the first part. Let's recoup and prepare for the second part. Okay guys, the topic of the second part of this presentation is tools of the trader. What do you need in order to start trading? We talked about the money, we talked about the commitment, and now let's talk about the peanuts here, which is a laptop and two large screens. I'm using Samsung 29 inch screens and a laptop, and I have another two sets of screens, but you are a beginner, you don't need 5 screens overall. You need a laptop and 2 screens. And why do you need 2 screens? I will explain when we're going to talk about the platform, and of course I'm going to project it here in the room and show you how this how my screen looks basically. So but what you're seeing right now is a part of my screen where you can see the stock that I'm looking at, one stock at a time, in this case Amazon, and I'm looking at obviously other symbols. And if I'm looking, I want to move to another list. For example, this list is called big names, and I want to look at a list of the IPOs of this year. I can switch to that list or to the list of the leading ETFs, and then I can switch to that list as well. And basically building lists is part of our routine, but not an issue right now. So again, what do you need? 2 large screens. That's I guess $150 at the most. So that's $300. A laptop you have already. That's no investment here, and you need to connect between them using some kind of wiring. Depends on your laptop. Again, zero investment in terms of money, so you can control with your mouse and move your mouse freely between the 2 screens that you added and your laptop. Or if you don't have a laptop and you have a desktop, then you need to use another screen, or you have already one screen for your desktop. So basically overall I'm using 3 screens, laptop and 2 screens. If you have a desktop, there's going to be another screen and 2 additional screens that you're going to buy for day trading. And again, you don't need to invest in super duper screens. A normal screen will be a normal 29 inch screen will be great. And if you have and I'm sure that you have internet with at least I think it's 90 to 150 download and 900 speed to upload. Again, any direct internet. I was working. My platform was working great 15 years ago, so it's going to be working great anywhere you live in the United States. No doubt about that. Zero issues with that. So that's your hardware. You don't need anything beyond that. You don't need to be close to the New York Stock Exchange. Don't move from Arizona to Fifth Avenue just to be close to the. That's BS from the past. Now, what are the best platforms for beginners? And again, there are so many platforms in the US right now that it's mind-boggling. When I started trading with CyberTrader. It was at that point in time, before Charles Schwab bought the CyberTrader. I think it was the best day trading platform for beginners, and who suggested that? Chris Mercer, and he was an expert. Anyway, I think 99% of the platforms will be great for trading the US equity markets in 2025. The reason for that is that all of the US platforms are free, and the liquidity, as opposed to the liquidity in 2008 or 9 or 7, is totally different. You have abundance of liquidity here, and we don't have the 2008 financial crash, and we have amazing platforms I'm using for research. I don't live in the US anymore, so I'm using for research the Chinese platform Moomoo, which is available in the United States, but I never traded it, so I cannot suggest it. I can suggest it for research. Is amazing. For performing the day trading business, I don't know if I can suggest it, because I never traded it with it. I assume that all of those platforms are great. And again, it doesn't need to be great, because the way you operate, you learn to operate in this market. You don't need anything great. You just need to use simple orders like stop and stop loss, which is also a stop order, and sometimes a market order, and very, very seldom a limit order. Most of the time you will be trading highly liquid, if not super liquid, or the most liquid stocks in the market. So that's beside the point. Now, there are so many platforms, Robinhood and Moomoo and Charles Schwab and Thinkorswim, I think is Charles Schwab now, and TradeStation, and there's a new one, Webull. Again, it's like you have to choose out of 20. I don't know if there is any difference between them other than the research part. Okay, the research part that I'm experiencing with this Moomoo platform, which obviously is regulated in the United States, but I cannot go with Moomoo. The research is amazing. That's all I can say. Okay, now commission fees and all this BS that used to be very important in the past. You don't pay commissions anymore. Zero commissions on all the trades, and maybe there are some fees here and there to transfer money for the platform. Let's face it, this is like I don't want to say peanuts, okay? Because I don't know what each broker can hit you with hidden fees and stuff like that. If there are hidden fees, move. No broker has, as much as I know, any distinct advantage, although obviously they will totally disagree. And like I said, the research part is important, which was nothing like that we had in the past. Now, again, remember, if you are a US citizen and you live in the US, this PDT rule, that's pattern day trading rule, applies, meaning you need to deposit at least 25 grand and have at least 25 grand or more in your account at all time to be considered a day trader. Okay, that's clear. Now, what about the margin rules in the US? If you are a day trader, you are allowed to trade 4 times your account inside the trading day. So let's say you have let's look at a stock from Friday, just to make things interesting. Basic shorts. Let's look at this stock. This is how day trading actually looks, guys. I don't know why this red bar is still here, but it will disappear hopefully in a second. So this is Carter. CRI is the symbol. Those are the basically the manufacturers, or basically they are selling in the US the Oshkosh children's I don't know if there's children pajamas or any other clothes for children that are being sold across the year, or winter wear of Oshkosh and stuff like that. So anyway, they've been hit with a terrible earnings report, and you can see that the stock dropped like a stone after earnings. We'll elaborate on that. That's how the stock closed at 33 Thursday and started trading at 25 or so Friday. So this stock is under a lot of pressure. Why? The quarterly report was terrible. And why? Trump's tariffs, and then they are not selling a lot because the US consumer is under a lot of pressure. And bottom line, you can see that the price dropped until the low of 23.50, and then it stayed there for more than an hour. You can see that's 10:30 in the morning, and after 10:30 the stock started to move higher. You can see the price action, and basically it closed at 26.30. So basically the stock gained from the lows to 26.30 like 12%. That's 12% on your money. If you bought at the lows and you know how to buy the lows, that's 12%. So you bought a $10,000 position, that's $1,200. Now, again, going back to what are you allowed? So you have $25,000 in your account, therefore you can buy as much as in all of your positions $100,000. Okay, minimum, because you have at least $25,000 and one. So during the trading day you can buy equity worth 4 times of your account, of your balanced account, and overnight you can carry only 50% more. So overnight you can, if you have 25, you can carry another 25 overnight. So a position of at least $50,000, sorry, maximum $50,000 you are allowed to carry overnight. We are day traders, we're not carrying anything overnight, but we do want to use, which is free, okay, the intraday buying power of $100,000. Therefore, when I said that I can buy a position of $10,000, basically I can buy 10 positions of $10,000 in this CRI. And again, who cares? I'm not talking about the price. I'm talking about how big is the position. If it is $10,000, I mean, it means that I can buy like 480 shares of CRI. Being that I don't pay for any shares, I don't care. And if the share price is, let's say, $100, then I will buy 100 shares of $100. That's $10,000. And I will carry it for whatever I carry it, 12%. It's the same amount of profit. So 12% out of $10,000. It doesn't matter how you package the $10,000 with $50 bill, a $1 bill, or a $1,000 bill. Let's say there is a bill like that with Donald Trump's face on it. The result will be the same. So this is basically how you look at US day trading with a US broker, and it doesn't differ much for other brokers. So we talked about now how do you act inside the trading day. Okay, you can carry as much as 4 times your account, and by the end of the trading day you need to sell everything. And as a day trader, again, if you are a different type of trader, do whatever you want, but as a day trader you carry no position into Monday, and you have zero position, all your account is cash. Okay, so you don't have shares in your account, you have cash, and you start fresh Monday morning. And the Monday at 3:58 p.m. you close again all your position, assuming you have positions open, and you start fresh on Tuesday. So I hope it's so far it's clear. Let's move now to the third subject. Our third subject, after we discussed the logistics of opening the account, how much money do you need, what kind of a computer do you need, and all of that, and the regulations and the PDT rule, and how much can you carry overnight, and how much money are you allowed to trade inside the trading day. Now let's take a step higher, move higher, and now talk about the only thing that's important, how you go about your first trade. There are 6,000 stocks in the US equity markets. 6,000. On top of them, there are ETFs, which are exchange traded funds, and we'll remember this concept for later, but there are another, I don't know, thousands of ETFs. Very few are really important, but at least 20 to 50 are important. You know what, let's say 20. So you have 6,020. And again, 6,000 stocks is a huge number, okay? And so how do you start? Which stocks you're going to trade? Let me show you an example that you can follow. Let's take a look at the most important stocks in the US equity markets. I used to call it, or still call it, the big names. And those are the big names. Let's go to the most important stock right now, NVIDIA. And this is NVIDIA with a 3-minute bar, where each bar is 3 minutes. Some of you know already what a bar is. Those who don't, we'll deal with that later. So this is NVIDIA. And you can see on this list, there are, I think, 12 names. 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, 12, 13, 16 names. Okay, 16 names. And you can decide, okay, that's my strategy. Those are the most important stocks in the US equity markets. Assuming you agree with my definition of an important stock. And I will trade out of this list, only out of this list. I will trade Apple, I will trade Google, I will trade JP Morgan, Walmart, basically the best of the US equity markets. Those are the stocks, and Tesla obviously, and Alibaba from China. So I have a global exposure, and Amazon. I will trade out of this list. And some of you will take it to the extreme and say, why would I trade them from a list? I would trade one stock. And trust me, I've seen this concept before. And let's go with Tesla. Why won't you trade Tesla every day? Tesla has a big range. It moves, let's see the example on Friday. Lows of the day were 3,008. Highs of the day, you can see them, the high of the day here, 23.63. So between 8 and 23, that's $15. Isn't it? $15. So if I know how to buy $1,000 at the lows, times 15, sell at the highs, that's 15 grand. Every day, can I do it every day? Let's say I can. So I'm not gonna lie to you. If you can do it every day, you're not gonna show up to work every day. You're gonna be really going to the Copacabana beach at 9:30 in the morning. Now let's get real. Okay, so it's not as simple as it looks. Actually, it's way more complicated. I wish it was that simple. So there are days when Tesla is moving higher. There are days when Tesla is moving sideways and not doing anything. And there are days where it's moving lower. And there are days where you think it's moving higher, but eventually it's going to turn around and run lower. And maybe you lose money. I don't know how much. Okay, but the concept is that you need to learn how to approach stocks, okay? And why trade stocks, a stock like Tesla on Friday, and not trade, for example, a stock that looks like this, and we've seen it, and I'm in shock to see anything like that, to see this stock move sideways for 6.5 hours. So how much money can you make trading this stock? Probably you lose money eventually, but you can easily make money making good decisions trading Tesla on Friday. And again, Tesla on Friday was up, you can see, guys, 3.5%, okay, while Amazon was down 0.34. So one of the let's put it this way, outcome of this discussion is don't trade a stock that shows down 0.30 or down 0.34 or down 0.000 whatever. Trade the winners. And if you remember the CRI Carter example, trade the loser. So trade the extremities. Don't trade the middle of the pack, where 99% of the stocks are basically packed, and only trade the extremities. And this is already something that you can work with. So first, trade idea, don't trade anything that's not moving. You want to trade stocks that are moving a lot inside of trading day, because remember, we are day traders. Day traders make money buying at the bottom, selling at the highs, or selling at the highs, buying at the bottom, which is a short trade. But we make our money trading inside the trading day. So we are basically a Warren Buffett of day trading. Will basically start buying at 9:30 in the morning and will sell at 3:58 in the afternoon. That's Warren Buffett of day trading. Obviously, there are day traders that can buy a position at let's say 10 in the morning and sell it at 10 and 5 seconds, or maybe at 10 and 30 seconds. Okay, that can happen. Many day traders work like this. We'll talk about day trading strategies later, but the idea here is that you need education. And again, to learn how do you approach the trading day, what preparation you need to do, what stocks to buy. And let's say you bought Tesla and it's moving up. What do you do next? When do you sell Tesla at a profit? What is your target as a profit? How do you protect yourself in case the trade works against you? And again, the most important part, after you decided that you're going to buy Tesla, because Tesla is up 3.5%, while the rest of this list, 16 stocks, are not doing anything, assuming this is live now. And you can see that at one point Tesla was up way more, because it was up as high as 323, and it closed at 316. That's right here you have 3%. So when it closed at 352, it means at one point it was more than 6% up. And you can see that this move is really, really brilliant. Okay, so even a beginner can understand that this is the type of an intraday pattern that you want to buy, okay, to make money. But let's stop here and ask ourselves, what are the steps? Okay, what are the steps that you need to take in order to enter a trade which will be profitable? First of all, you need to pick a stock, 1 out of 6,000. And there is a process that we can develop to put you in a position where you can pick not one, but look at a very, very close list of stocks, not that many at the beginning, something like between 5 and 10, and for out of those 5 and 10, you will pick one to trade. And let's say you enter the trade, you need to know two things, okay? What is obviously the entry point, a must, and what is the stop loss, and how much are you afford to lose. So let's see an example here. Let's say I'm going to buy a Tesla, and I decided, and this is obviously just for the purpose of making my computation easier. I decided, hold on, where is it? Where is it? Okay, I don't know, I cannot find the horizontal line. Okay, let's do it with this one. I want to enter the trade at 310, and my stop loss is 308. Oh my god, this is terrible. Hold on a second, guys, 1 second. Sorry about that. Trend line, okay, here it is. So 310, that's my entry. Let me sign it up with a 310 price tag. Here it is, 309.99. That says as close as it can be to 310. And according to the chart, and you already seeing some technical analysis, my stop loss is at the bottom of this bar, and this is 30. Let's say it's 309. Okay, so I'm risking only $1 on this trade, which is amazing. It doesn't happen very often, but that's only on paper. So on paper things are great, and this is the risk on the trade. So let's say I'm buying one share. I'm risking between 310 and 309 $1. Obviously, I'm not going to buy one share. Let's say I'm going to buy 100 shares, which is a position of $30,000. So $30,000, I'm buying 100 shares of Tesla, and the risk is $1 per share, and I'm risking on this trade $100. Now, it's your decision as a day trader, investor, owner of your capital, to decide if you are okay of risking on this trade $100. 99% of traders will say, yes, I'm okay, but maybe you will say, no, I don't want to risk $100. It's a lot. I want to risk only $50. So what do you do in this case? In this case, instead of buying 100 shares, you buy only 50 shares. So you buy 50 shares, the position is $15,000. You risk $1 per share. That's 50 shares times $1. So here's your risk, $50. And if you are more aggressive, you buy $200, assuming you have the capital, and you easily have the capital because your minimum capital is $100,000. So you can easily buy 250, I think, 300 shares. Yeah, at least 300 shares. But obviously, we're not going to put our whole capital to work in one position, and we decided on 100 shares, and our risk is $100. And here it is, day trading. This is exactly what you do as a day trader. Okay, and now comes the big question. Okay, let's say I'm risking $100. That's already a given. I'm using a stop loss in the platform. We'll discuss what stop losses are in the platform, and I'm buying with a market order or with a stop order at 310. The liquidity is perfect. I'm only buying 100 shares, so I'm getting filled exactly at 310, and the stock moves higher. And so what is my target profit for this trade? $400, $500, $311. Nobody's telling you. You are alone in your living room or bedroom or wherever you're trading, and you need to make a decision. And it's best if the decision is made prior to entering the trade, because prior to entering the trade, you know the stop loss, you know how much you want to buy. You're not going to decide how much you're going to buy while the stock is exactly at 310, and then you say 80, 70. No. This is already captured in your brain. The plan is in your brain, at least the part where you enter the position and you have the stop loss. And now the stock evolves, or the trade evolves, and it goes in your favor. Now if it goes against you immediately, so you lose that $100. Tough luck. And you move on. Nothing happened. Nothing bad happened. Actually, sometimes it's a good thing. Okay, which means that you're not picking the entries very well. But let's say that you are a great trader from day one, and you bought a Tesla at 310, and the stock starts moving higher, and this is the pattern that it takes. You can see it moves to 314, goes back to 312. From 312 it goes until 323, and goes back and eventually ends up back at 312. Couple of hours or 4 hours later. So that was 11, and at 4 p.m., 5 hours later, it's pretty much at the same level. So what happened here? Basically, you were in this trade 5 hours. At one point, you were making, let's see, $13 times 100 shares. That's the most that you were in the money, plus $1,300. And all those $1,300 pretty much vanished. Sorry, my mistake. It closed at 316, and you entered at 310. That's $6. You ended up on this trade with $600 5 hours later, plus 600, and your risk was 100. So divided by 100, you had a risk reward eventually of 6 to 1 on this trade. And remember this number, because this number is important. When you have a risk reward of 6 to 1, it's an amazing trade. Okay? Keep in mind, it's an intraday trade. Now at one point it was twice as that. It was 13 to 1. But nobody's expecting you to guess that this is the high of the day. Okay? So many people will say, what? I'm not waiting for this stock to move $13. Once I have 1 to 1, I'm selling part of my position, then I'm selling more, maybe I'm adding, then I'm selling again, and they are making a mess out of this move. Okay? Which is great if you know what you're doing. Now, as a beginner, I want to suggest, that's my take after watching charts for 18 years, and during those years hardly missed any trading day, and those trading days I was watching at least 5 hours. So you need to multiply 5 hours times 200 trading days per year times 15. I don't know the math, but it's a lot of chart watching. And my 2 cents are, which is again, many people won't agree, but I will say it anyway. Don't sell anything. Okay, so if once you enter a position and it's a planned trade, and if it's really planned, okay, all you need to do is cover your losses, meaning you move your stop loss from 309 to 310. And now that means you cannot lose money on the trade. So you're creating free trade, what we call a free trade. So basically on paper, now what you want to do is be a free trade machine, where you on paper create 50 trades like this. 50 trades where you are buying a position, it's successful, it enters the money, you move the stop loss to the entry, and out of those 50 trades per day, some will make $1, some will make $2, other will make $4, some will make $15, and you're going to be rich very fast. But you cannot deliver 15 trades per day because you are human, and if you have an amazing brain, maybe you can deliver 5-6 trades. Okay, I don't know how many trades a genius can deliver, okay? But a normal person will deliver 3 to 6. Some of them will be losers, but again, the concept is that you are picking the right stocks, and those stocks are overperforming the market like Tesla did. And then you don't manage. You just move your stop loss to the entry and wait. And this sometimes you wait 5 hours, and the stock comes back to the entry, and you made up nothing. And sometimes the stock moves up $13, and then instead of moving down 7, it starts to move sideways, and into the close it goes up another 5. It can happen, and it will happen to you. Okay, not every day, but it will happen. And the idea here is that those trades are going to be so big they were going to basically wash off the rest of the noise. Some will make $2, $2, others will lose $1, and overall none of those will be profitable, but you have 1 or 2 big winners every day, and those big winners will translate into thousands of dollars, and this is how you succeed. Now, if you can agree, as a beginner, you have to agree because you have no alternative. Now, if others that traded the markets can tell me, I don't agree at all, and I'm not arguing with you. I'm just saying this is coming from 18 years of watching the charts 5 hours per day, every day. Now, you can, again, being that I'm not managing your money, and I'm not managing my money. I'm a mentor now, so I'm just free to express my best opinion. So that's my opinion. Okay, you don't have to do it, and I'm not getting any commissions if you succeed or otherwise. But I want everybody that's going through my mentorship to succeed, because that's my ego and livelihood right now. Okay, guys, let's take another break for the next and last part. Okay, so we discussed, if you want to recap what we discussed so far, we discussed basically how to start, how much money you need, the regulations, the time you need to put in, how much money the broker will allow you to spend on intraday trades. Now we talked over the last 20 minutes a little bit about strategies, what stocks you need to buy and how you need to manage, that you need to have a plan. It's super fast. It's impossible for you to capture what I just said in so far 57 minutes, and I have 3 minutes and I will add another 5, so I will go over my allotment of 60 minutes only by 5 minutes. Again, the concept of day trading is that it is like driving, but way more complicated. I would compare it to flying a plane. Okay, why flying a plane? Because you are solo. When you're flying a plane, not a 747 or 777, when you have another co-pilot, when you flying a plane, a small plane, it's you. All the decisions are you. You make the decision where to land, how high to fly, comply with regulations of flying, and if you make a mistake, you may crash, and you won't be able to get another chance. It's not the case in trading. Okay, you're not gonna crash. You may lose some money and your ego is gonna be hurt, but unless you go really berserk and wild, and you are a normal person that listens to what a mentor is telling you, you're not gonna crash. So again, you need this is a process where you need to learn. Now I offer mentorship to our program here at TCM, and the whole program is basically revolves around watching charts. That's why you don't see my face. You don't need to see my face. You don't need to see anything other than the chart, because the money is made focusing on the chart as much as a pilot is focusing on his instruments when he is wants to take you or himself from point A to point B. He's not looking at the ceiling. He's not talking on the phone with friends. Okay, he's 100%, especially when it's a beginner, but at all times. All timers make big mistakes in flying, and sometimes stuff happens. It can happen here. I can testify as a veteran. Sometimes you lose your composure, you make mistakes, but it's not like flying. That's a difference. So here it's ego and some money, but you're trading the best equity markets ever. So which is not the same with when you fly a Cessna. You're flying a Cessna. You're flying. I don't want to say a piece of shit, but it is a piece of shit. Okay, Tesla is not made in 2025. If you're lucky, you're going to fly a Cessna from 40 years ago. When you're trading this market in 2025, you're really trading a Cadillac of markets. But you still need to operate it with caution and understand what you're doing, and you cannot just start after I don't know, a couple of days of I don't know, mentoring or whatever some programs are offering. No, this is it needs to be captured, analyzed, done in a smart way. So again, when I say mentoring, and my program is 18 hours, but it's not really 18 hours. It's 18 hours with me, but it is months where you're getting the basis where you can basically do the same thing every day. When you do the same thing every day, you can improve. Because if you do different things every day, you're not going to improve. Okay, so doing the same thing every day, day in and day out, it's the routine of a day trader, where you can improve your performance and become a real business, because businesses that are successful are doing the same thing very good every day. McDonald's does the same thing every day, and Apple does the same thing every day, and Google the same thing every day. And everybody that's successful does the same thing every day. Nobody changes its strategy every day in and day out. Okay, I hope it was enough. Let me see if I have any tips that I've written down. Okay, yeah, very important. Please approach us. We are having from time to time webinars, but this is the summertime, so I don't know if we're going to have webinars, but we have our email that's totally free for everybody to inquire, and if you want to move forward, there are phones, there is obviously Zoom meetings. There are Zoom meetings that you can schedule with me, and of course we have the YouTube channel where we are broadcasting live from time to time, but there we can only chat. So the best way to approach with any question, and we are answering 100% of emails, unless there are some of them, very few though, filled with profanities, and mental patients are on board with our program, but we're replying, and that's a guarantee. So no question is going to be left unanswered. None, zero. So I hope it was, like I said, illuminating enough. If you don't want to participate in the program because you don't like it, it's too expensive, or you don't like my voice, or whatever, that's fine. Use our channel, because our channel, maybe I'm wrong, but you can correct me, is the only channel that is showing real trades every day as they happen. Okay, we analyze, not live of course, we analyze in retrospect, but we analyze trades. When I say we, it's mainly me. I analyze trades every day and not one trade. Okay, and you can learn from this channel a lot. So it's not a channel where I'm going to teach you how to make $1 million in 6 months or 3 months, and you need to buy a 50,000 share position every 2 months and whatever BS. No, like I said, this is a job that you need to work, apply yourself, and you have a good success of succeeding, because you have the best market in the world. You have zero commission platforms that we all could only dream like this in the past. You have the concept of returns intraday that never happened before. When we traded, when I started trading, I was happy to get a 15-cent or 20-cent move in the stock. Now you're talking about 6-8% return on a trade, not move, return, percentage of return on your position intraday, not on a daily chart, not on a monthly chart. You're talking about return percentage wise intraday. And you have an experienced mentor that has seen not everything, but a lot. Okay, guys, again, like, subscribe. If you're interested, do approach us or me. And if you don't want to approach us, do still like and subscribe and stay with this channel, and you learn little by little. Thank you very much, and see you in our next video.